Alibaba year to date is up over 60%. Pre-market, it is expected to increase even more, 4%, 4.3%. They reported the results for the last quarter, the third quarter, and they were amazing. The growth has come back. If you read just a little the presentation, you will see big improvements for Alibaba. Maybe you remember my past videos. For the last 3 years, when the stock price was around $70, $80, I said, this is a bargain. Buy. And I've made several videos where I said that I'm buying this company. And so far, as you can see, after 3 years, the stock price has increased by 60%. And it is expected to increase even more. So let's look at their highlights. Taobao and Tmall, their main business, where most of their profits come from, has increased, especially this segment, customer management, has increased by 9% year over year. Amazing. When you see an increase in this segment, you also see a big jump in their profits. And that's why their income from operations, as you can see here, has increased over 83% year over year. And their net income, which includes more investees, has increased by over 300%. An amazing performance. Now, first segment, the main segment, e-commerce China, 9% year over year. Then cloud. The revenue has increased compared to last quarter when they reported a growth rate about 9%, something like that, 7 or 9%. But now the growth rate has accelerated. A double digits, 13% year over year. And the management said they expect this growth rate to improve even more in the next quarters. So next quarters, Q4, next year Q1, when they report the results, you will see an improvement in this growth rate. But not only for cloud, but also for e-commerce China. So if you are patient enough, the stock price this year can reach $200 per share. Quite even more than that, if the growth rate continues. And their e-commerce international has maintained their growth rate over 30%. Amazing. Plus, this is not all. The management took advantage of those low prices for the last years, 1-2 years, and they did a lot of buybacks, have done a lot of buybacks. As you can see, the number of shares from 2023, March 2023, has decreased from 2.5 billion to 2.3 billion. Amazing. And they still have, be aware of this, they still have here 20 billion for buybacks. The management said if you listen to their earnings call, they will keep an eye on the stock price. If the stock price reaches $200 per share or even more than that, then their buybacks will decrease, won't be that high. Be aware of that. And they also said that they'll continue with the dividend. They'll continue to pay this dividend. That's great. Now, you've seen the results. Income from operations, amazing growth rate, over 83%, and final net income, over 300%. You see this higher increase in their net income because Alibaba also owns Ant Group and other equity investments. And when the earnings of those businesses go up, also the earnings of Alibaba go up. So that's why you see this difference in their growth rate. Now, you may wonder why their free cash flow has declined so much. Because if you listen to their earnings call, they will spend more money on AI infrastructure. The strategy is to open source their models so that they can attract more customers to their cloud ecosystem. This is the strategy for the moment. They'll spend more on AI for the next 3 years than they did in the last 10 years. So their capital expenditures will increase in the next 3 years, and their free cash flow may be lower or around this level. you won't see an increase in their free cash flow because they continue to invest in their AI ecosystem. But what matters at the end, because you need to have a long-term view, what matters is the revenue and their margins over the next 5 to 10 years. And you look here, the revenue for the last 3 months for each of their businesses. You can call them segments, but if you take each segment, you'll see that this is a business. Taobao and Tmall, e-commerce China, e-commerce international, cloud intelligence group, Sineo, their logistic network, local services, and digital media, and all others. All other means Sunart, which has been sold, Freshippo, Alibaba Health, Pharmacy, Linksy Games, they're also focusing on games, InTime, which has been sold, Intelligent Information Platform, Fliggy, DingTalk, which is an enterprise application, and other businesses. But they said that most of the revenue, the increase in the revenue for all others, came from Alibaba Health and Freshippo, Pharmacy and Commerce. So this is also an important segment, all others, which has increased by 14% compared to last year. So you look at those businesses, the most important business for the moment is Taobao and Tmall, e-commerce China, 146 billion renminbi. Then Alibaba International e-commerce, 37 billion renminbi. Cloud, 41 billion. They are close to each other. Sineo, 28 billion. Local services, 16.9 billion. And digital media, 5.4 million. And all others, 53 million. The next steps, they said that they want to focus more on their core business, e-commerce and AI cloud. And the others are the support for their main core businesses. They need the logistic network. They have an advantage with this in China and international, and also with local services. By the way, this segment has high potential because if you look at their services from logistic services, you can see that they have MAP and LMA. Think of MAP, a digital map, navigation, real-time traffic information. They make money from ads, advertising, most of their money, most of the revenue. And LME is an online platform for food delivery. And they earn money, most of the revenue, by charging restaurants a commission. According to my research, between 10 and 20%, sometimes lower. And they also offer other premium services besides those two. So this is another important business for Alibaba, where the revenue has increased by 12% and also their losses have decreased quite a lot, from 2 billion renminbi to 500 million renminbi. So this will be another driver for the overall profitability of Alibaba. Now, you can take segment by segment, look what they've done, what they did. Let's look at the most important segment, e-commerce China. And here you can see customer management has increased by 9%. China commerce wholesale by 24%. Those are the most important sub-segments because they offer value-added services. And direct sales and others has increased by 9% because you can see here a decrease of 9% compared to last year, primarily to a planned reduction of certain direct sales businesses. The management said in the previous earnings call that they will reduce this segment and they will focus on high profit margin businesses. So you see this decrease not because they weren't able to sell more, but because the management is focusing on high profit businesses. Then international, you see this amazing growth rate over 32%. Their losses have increased because they said that they're investing more in expanding this business in certain countries from Europe. And for the moment, they are focusing on customer experience and attracting more customers. Their largest platforms here are AliExpress, maybe you know it, Trendyol and Lazada. And of course, Alibaba for wholesale. Those are quite important. Then Cloud Intelligence Group, you see the growth rate has improved for the revenue, 13%, and also their profits, an increase over 33%. They say that they're planning to invest more in this infrastructure, their cloud, to focus on AI and attract more customers. And they said that the growth rate for their cloud business is expected to increase even more from this level. So those are big news. And I'm sure that they will deliver those improvements. And next quarter, you will see the same growth rate, maybe a little bit higher, and the stock price will continue to increase. Now, what you have to know is, the question for yourself is still Alibaba undervalued at the current level? And my answer is yes. At $80, the management said in recent earnings call that the stock price was extremely undervalued. But now, at $145, in my view, the stock price is still cheap. You can have a return more than 10% a year. Of course, in the short term, you might see some ups and downs. But long term, the stock price will do well, quite well. So if you want to know more about the other segments, or if you have other questions, let me know in the comments.